Banco Filipino's fall serves as a stark reminder of economic mismanagement, corruption, and greed, illustrating the downfall of a powerful family during the Marcos regime due to debt, ineptitude, and politics. Join me today to the very end as we examine the collapse of Philippines' largest banking. Let's see a history of Banco Filipino. Tomas Aguirre established Banco Filipino in 1964. At the time, he was also the owner of the well-known pawn shop, Agencia de Empeños de Aguirre. Actually, Aguirre was able to establish the bank thanks to the pawn shop's revenue. After being founded in 1966, Banco Filipino quickly rose to prominence, taking the lead in banking in the Philippines in just 2 years. Nearly everyone had a Banco Filipino bank account by the 1970s. Maybe it was the branding of the Filipinos that made hundreds of them deposit their savings. Subok na matibay, subok na matatag was Banco Filipino's catchphrase, meaning shown to be strong, shown to be stable. In 1970, Banco Filipino expanded into rural areas when it established its first provincial branch in Naga City. In spite of being a marshal under martial law, the bank's customer base had grown to 1 million by 1972, less than 10 years after opening its first location. The feat, which no other bank in the Philippines had previously accomplished, was due to its aggressive expansion strategy, particularly in the countryside, where Filipinos were reluctant to open savings accounts. By 1981, the bank's assets were an astounding $4 billion, with over 89 branches around the country. All of this came to an abrupt end in 1985, during the tenure of dictator Ferdinand Marcos. The Banco Sentral ng Pilipinas, BSP, ordered the bank's dissolution for alleged insolvency or inability to pay debt due to mismanagement by its executives. In 1975, it was chosen as Metro Manila's most favored bank. With 89 locations, 4 billion pesos in assets, 3 million customers, and 3,000 owners by 1981, the bank had accomplished something that no other savings bank could match. The younger demographic proved to be one of the most successful strategies for growing its clientele. In the 1970s, Banco Filipino founded the Happy Savers Club and advertised it on radio and TV, complete with dancing, mascots, and a jingle. Furthermore, it was the first bank to take small peso deposits. Merchants and proprietors of sari-sari businesses entered carrying dollars or coins in brown paper bags, signifying their daily earnings. Monetary Board Resolution 75, issued on January 25, 1985, by the central bank, then headed by Governor Jose Ahobo Fernandez, directed the liquidation and the receivership of Banco Filipino. It should be mentioned that Banco Filipino was given permission to operate as a savings bank by Monetary Board number 223, which was issued by the central bank on February 14, 1963. Banco Filipino started functioning as a savings bank on July 9, 1964. At the time, Banco Filipino had more than 3 million depositors and 89 operational branches, 46 of which were located in Manila. On June 29, 1984, Banco Filipino was granted an emergency advance of P119, 7 million by Monetary Board Resolution number 839. Later, on July 27, 1984, Banco Filipino received a P3 billion credit line from the former central bank. On the same day, the then central bank placed Banco Filipino under conservatorship. The central bank's Department of Supervision and Examination found the Bank Filipino Savings and Mortgage Bank insolvent and illiquid, prompting the conservator to prohibit the bank from doing business in the Philippines, Secret 29 of RA 265 as amended, and appoint the head of the conservator team as receiver. When the then central bank issued Monetary Board Resolution number 75 on January 25, 1985, ordering the closure of Banco Filipino, Banco Filipino filed a complaint with the Makati Regional Trial Court seeking to set aside the Monetary Board's action placing Banco Filipino under receivership. Later, on February 28, 1985, Banco Filipino filed a petition for certiorari and mandamus under Rule 65 of the Rules of Court with the Supreme Court, case docketed as GR number 70054, seeking to annul the resolution, number 75, issued by the then central bank on January 28, 1985, as being made without or in excess of jurisdiction or with grave abuse of discretion. On March 22, 1985, the then Central Bank Filipino announced another resolution putting Banco Filipino into liquidation. On December 11, 1991, the Supreme Court issued an en banc decision nullifying Monetary Resolution No. 75, ordering the Central Bank and Monetary Board to reorganize the bank and allowing it to resume operations. In the words of the Supreme Court, the challenged order of the Central Bank and the Monetary Board dated January 25, 1985 is hereby annulled and set aside. The Central Bank and the Monetary Board are ordered to reorganize petitioner Banco Filipino Savings and Mortgage Bank and allow it to resume business in the Philippines under the supervision of both the Central Bank and the Monetary Board, subject to such conditions as the latter may impose in connection with its reorganization, until the petitioner bank can continue in business with the safety of its creditors, depositors, and the general public. After the Supreme Court deemed Banco Filipino's closure void, the company filed for damage claims totaling P18. $8 billion to compensate real damages, liquidation expenses, attorney's fees, interest, and other associated costs. Banco Filipino's claim for damage claims had not been settled by the time it was closed for the second time by the BSP Monetary Board on March 17, 2011. In other words, the Supreme Court ruled that Banco Filipino's first closure was not legitimate. The Supreme Court ruled that the closure and receivership of Banco Filipino, imposed by the Monetary Board of the defunct Central Bank on January 25, 1985, is null and void. The closure was arbitrary and perpetrated with egregious abuse of discretion. Significantly, in the first closure case, the Supreme Court addressed the issue of solvency-insolvency. According to the facts of the case, GR No. 70054, one of the then Central Bank deputy governors stated that Banco Filipino's liquidation was due to purported insolvency rather than unsound, hazardous, and fraudulent banking practices. The Supreme Court stated that the petitioner bank's solvency is supported by the Monetary Board's approval of a P3 billion credit line and conservatorship under MB Resolution No. 955 dated July 27, 1984. This prepared the door for the bank to reopen on August 1, 1984, following its self-imposed bank holiday on July 23, 1984. This court so concludes that the grant of the aforementioned emergency loan was intended from the outset to fall within the second paragraph of Section 90 of the Central Bank Act, which could not have occurred if the petitioner bank was not solvent. Despite knowledge of the irregularities and unsafe banking practices allegedly committed by the petitioner bank, the Central Bank even granted financial support to the latter and placed it under conservatorship. Such actuation means that the petitioner bank could still be saved from its financial distress by adequate aid and management reform. This was necessary by the central bank's duty to maintain the stability of the financial system and preserve public trust in it. Ramos versus Central Bank, No. 29352, October 4, 1971, 41 Skiro 565. Granting in gratia argumenti that the closure was appropriate to protect the public, the petitioner bank's substantial financial troubles should not automatically result in its liquidation. According to Section 29 of the Central Bank, a closed bank may be reorganized or otherwise placed in a situation that allows it to resume activity while ensuring the safety of its depositors, creditors, and the general public. Banco Filipino struggled through the 1990s and 2000s, serving as an alternate, less congested bank in Metro Manila. Its offices still have brown furniture from the 1970s, reminders of its glory days. It also sought to revive the Happy Savers Club, although it was not as successful as it had been in the past. Mismanagement was also an issue at the bank. In 2011, the BSP shuttered Banco Filipino again due to claimed excessive liabilities incurred by the bank in relation to its assets. The Bangko Sentral NG Pilipinas dissolved Banco Filipino, stating that the bank's liabilities exceeded its assets by 8.4 billion pesos, which is against Philippine law, which requires that a bank's assets equal or surpass its liabilities. However, Banco Filipino claims that it had 31.4 billion pesos in properties and 23.8 billion pesos in liabilities, leaving the Savings and Mortgage Bank with 1.6 billion pesos in positive assets, indicating that its assets exceed its liabilities, which could have been used in its planned rehabilitation. The BSP also filed complaints against Banco Filipino personnel, including Chairman and President Teodoro O. Arcenas, Jr., Vice Chairman Albert C. Aguirre, Executive Vice President Maxi S. Abad, and Directors Orlando O. Sampson, Adelaida C. Aduru Bowman, and Francisco A. Rivera, and Ramon E. Montano, Executive Vice President Catherine Aguirre Hernandez, and Senior Vice President Roberta Afable. for allegedly obtaining self-serving loans totaling P2. 192 billion. Banco Filipino's assets are now forgotten, including the ruins of a flashy hotel in BF Homes named Tropical Palace, its abandoned offices in Makati, and the vast horse ranch in BF Homes that never ran out of water to keep the grass green for its horses. People avoid its previous Metro Manila branches since they are dark and have not yet been rebuilt as different banks. Banco Filipino is unlikely to reclaim its previous greatness, yet traces of the past remain. If you enjoyed watching, like, subscribe, and turn on your notification bell for more informative videos. Thank you for watching.